Hi, welcome everyone. Let's go through yesterday's Bank Nifty Futures price action analysis using 1 minute candlestick chart. I will take you through bar by bar what happened and what are the trades that were possible using the price action patterns that were executed. Right, so let's begin. This dark blue line is the yesterday's low, which is where price opened below that, and from there it was just the down move kicked off. At least for the first half an hour it was going down. Okay, so on this bar itself, it was a very strong close near the low. Bar 1, we are not initiating the trade unless you are a very aggressive trader and ready to go for a wide stop, right? Because it may or may not work because not much context has been established yet. Okay, so wait for more story to unfold. Bar 2, there's an attempt by bulls to hold the ground, right? Those who sold the close of this bar, which is basically low close is 870. This opened at 870, went down few ticks, 0.60, and then basically bulls bought the close, and it was an attempt to hold the ground. What you see, it closed, bar closed at 883.20. This high is 882.20. That means bears did not allow on bar 3 to for the buy to be triggered. This failure to work out and work its way up towards the moving average. Right, instead what we see is a strong breakout below bar 1's low. So bears have definitely taken control of the situation. At this point of time, you might feel, oh, I should have taken the short trade. I am missing out, and emotions are starting to kick in, and that might make you irrational, and the decisions will be taken out of haste or out of emotion. This is the exact thing that we need to avoid during real time trading or live session. You need to be able to stick to a plan. Is this something that you have tested in your back testing, or in your replays, or your practice sessions? Right, if it is not something that you have tried out in the past, don't try this in real trading or live session. Do not go for this might work trades. These are the number one sources of losses because you don't know how to handle them. You're doing it emotionally. If it doesn't start going your way right away, you are in panic, and then you press that panic button and you get out and it works. You must have come across the situation a lot of times, and that is the problem. So if you get out, it works. If you stay longer then you should have, and it doesn't work, right? Because you don't know how to manage the trade because you haven't practiced it. So don't take such trade, don't take emotional decisions, because as I keep saying, there is a better setup that is just waiting for it to be there, and you just need to be patient. That is a very good virtue that you should have. Setups line up. If you have patience, they will be there. They will come in on all the time frames, not just about 1 minute, definitely all the time frames. I chosen 1 minute time frame because I wanted to be able to finish everything in first 30 minutes to 40 minutes max. Okay, coming back to this day's analysis, this bear breakout had a follow through in bar 4, right? That means bears have taken control for sure. Now these bulls, what happened to these bulls? Those who bought in here, they are going to scale it. So that's what they are doing here on bar 5, 6, 7, right? They scaled in. So those who bought the close of this bar, or they bought the close of bar 1, right? They are scaling in. Now those who bought the close of bar 1, which is where here, that's where this rally stalled. So possibly these have gotten out at break even on bar 8 or bar 7, and those who bought the close of bar 2 are getting out at break even, and those who sold the close of bar 1 basically scaled in this zone, and they have made profit on their scaling portion, and the initial entry is at break even. So ultimately they are in profit. So this is how the smart traders or investors manage their money. Even if they enter at any point in time, they know the risks that they are taking, how to scale in and where to get out. Right, for a beginner, they should not try these things out. They should stick to going with the trend, right, and then take stop entries. Okay, and there are opportunities like that. So coming back here what happened here is, as you have to anticipate these things, right? Where are these trap traders going to give up, right? These are trapped. So this is basically going to come back up and at their break-even price, or basically small profit is where they are going to give up. Exactly where this bar rate appears, bears start taking control. They don't want the prices to go up, right? And they start pushing the prices down. Bar does not close strong bearish, but it does close bearish. There's a tail at the bottom, so possibly some bulls are scaling, and possibly those bulls who bought in the close of 7, right, those are trapped. So what they are doing now is, once the bar opens here on bar 9, they try to get out immediately after they scaled in lower. They got out. So now you know these bulls have gotten out. The bulls that bought in here are also out. So now this is the best chance for you to pull the trigger, right? It is also a first pullback after this attempt by the bears to create a trend. So this pullback entry triggers short entry, even though it is below a bar which has a bottom tail, but the context is telling you that it is a good setup. Go for it. Nothing is more than 60% certain. Here you are trusting your read. The context has been built. You know this is very good location because this is where the bulls are going to give up. What else you want? Pull the trigger, go in, the short gets triggered, and the move happens. Now you just depending upon your profit booking mechanism, you could go for 20 points, 30 points, 40 points, or you just keep riding the move based on the pivot highs. As long as you make new lower lows, you keep on trading the stops. Okay, so the profit booking is left up to you because everybody is different. So this move kept on going on. And another interesting story that developed here is bar 14. Okay, this is where bulls tried to hold the ground one more time. Even though this is a bearish bar, read everything very carefully, right? The duration for which you are trading, be very focused and understand what every bar is telling you, right? That basically improves your analysis, it improves your read, and it helps you with your gut feeling because it develops your gut feeling. These are the small nuances that help you become better trader. Bar 14, it tried to poke above. Bar 13 high is 827, bar 14 is 827.40. So just few ticks it poked and failed. So some bulls made an attempt to pause this down rally and create buying pressure. They were unsuccessful. Now these guys are trapped, those who try to do it, right? What are they going to do? They will try to scale in somewhere lower, right? So you could have gone for this trade. I have taken such trades in the past, but nowadays I'm not taking these trades, working out these kind of disappointments or give ups. Not that this doesn't work, but my trading has evolved and basically trying to do what I am more comfortable with based on my learnings. So bar 13 is where your trap trade will trigger. Low is 817.30, and that's where it triggers. There is an attempt by the bears to go down, not much movement or momentum here. One thing I forgot to tell you is basically if it is after a good enough rally, which is after 3, 4, 5 bars, and then the trap is appearing, the probability is lowered, right? Because that means that not many are getting trapped there, and hence the resulting move is not going to be fast. Okay, so let's say the short triggered for you 817, depending upon where you got filled on this bar, 815.50 or somewhere above it. It did not go much down. This basically came back up. These bulls who were trapped in here are scaling in on bar 16 and 17. What happened on bar 18? They gave up in this zone because they knew that the bulls who bought in here are disappointed. So they scaled in here in this zone on bar 16, 17, and they gave up here. This is exactly what you have to anticipate, where the bulls are giving up. Why I'm saying bulls giving up? Because there is a bearish context and we want to remain with trade. With trade are safe entries, so stick to them, right? And you see a good bar closing at its low. That's it. Context is good, location is good, signal bar is good. Go for it, pull the trigger, right? So short triggers below bar 18, and you keep riding the move. What happened to this short below bar 13, right? The stop is 824. So depending upon your feel, hopefully the stop did not get hit. If the stop got hit on this trap short below bar 13, you just ignore it, move on fast. There's no time to think about what happened and what you could have done and all those things. Happened has happened. You see that new trade is setting up. Bar 18 has given you a very good chance. Go for it. This is the way you manage trades during real time or live session, because there is no room for emotions. You have to act fast. 1 minute bars are just going up and down so fast that your decision making has to be really fast. Anticipation needs to be on the target most of the time, and then only you'll be able to execute. Okay, so coming back to this short trade, it got triggered 816, basically short below bar 18. 19 was a good entry bar. This is another pattern that appears a lot of time, wherein bar 20 tried a breakout test right below bar 18. It was held quite below bar 18 low, and you could go short below bar 20 low as well for a scalp, because we are already late in the move, right? It all started over here. So what happened to this short bar 816? This went to 786. So already you're getting around 30 points, and then you got 40 points on this bar 21. Then you get this support at bar 22. This is where they bought in, right? So your scalper, which is below 793, right, bar 20 low, this went to 771, 761. So you might have scalped 20 points as well on this short. So this was a 40-point trade. Definitely this short was how much? This is 860, right, around 855, let's say, and this went down to 767. So almost there, 900 points, but let's say you captured 80 points if you sit through all of this, right? Then what happened is bar 22, 3, 4, very good bull rally, right? Basically negated all of this fall. The moment you see a new pivot low is developing, I join the line. This bar 4, bar 21, 22, draw a parallel from bar 7. Why not from here? You can do that as well. I have done that, but this is the nearest pivot high or swing high. That is where I drew it from. That's where it stalled here on bar 25. Some bears applied the pressure, right? What happened next? Next is there's no follow through. Bar 27, again good attempt by bulls, so they're trying to hold the ground. Bar 20 and under pressure by bear, right? Because it's a bear trend, so we want to stick to trend. What next you see? Now after you doing this on bar 28, those bulls who bought in here, some of them scaled in looking at bar 25, bearish bar strong, closing at its low. They gave up. They scaled in and they gave up on bar 28, right? This is the zone. So you're looking at that, you just go short below bar 28, right? Now what happened? Bar 28, yes, short triggered on bar 29, bar 30, good follow through, but look at the range of the bar. It's not that great. Then what you see? Bar 31, it was just going up and down, up and down. This is the zone where it was basically stalling. Now what is happening is the bears keep selling on the closes of strong bars. So they sold close of this bar, and possibly this bar as well. Now those who sold in here are basically, if they did not get out of here, they are trapped. So they are going to get out somewhere here because they've been scaling and pushing the prices down, and that is where they got out on bar 31. Right, the moment I saw this, even the short was going on, it had not hit the stop, got out because it was not moving as expected. It was let in into the overall move. The channel line, the trend line had been broken, and it was not acting as fast. Plus possible zone where the bears were going to give up, right? So it worked. It doesn't work this way all the time, which is fine. You, if you're not able to manage these things, stick to your stops, let it be hit, and you move on to the next trade. 32, 33, 4, you see attempt by the bears, but again it was held. So basically forming a double bottom, 31, 34 with bar 22 as well. So bulls are taking the control, and then started pushing the prices up. Again, if the moment I saw this, join bar 21, 22, 31, 34 trend line and draw a parallel. right? That's where you see the stall. Of course, I have not traded it after 9:45, so but I'm just explaining this for the benefit of everyone, how to draw these lines, trend lines and trade channel lines, and that helps you in identifying the support and resistance zones, and also being able to identify those profit taking levels, right? The stall here, those who've been buying here, they basically got out here, right? These levels are being followed or drawn by all the smart traders or the consistently profitable traders. So why not do it? We do it as well, right? Then it kept on moving and all that. So that's it as far as this video is concerned. So there were these shots that were available to be taken. I hope you found it useful, right? And you'll see a lot of lines, these horizontal lines that are being drawn here. Why? Is because I'm drawing these zones where possibly somebody's going to give up, like in this case possibly bulls are going to give up, right? So these lines help me identify those zones on the chart, and being able to make decisions. Okay, thank you for watching. Hope it helped.